We're getting live visuals coming in from TCS. We will dip into that the minute the management speaks. But here's a quick look at some national news which has come in. Not so good news coming in as from Bangalore. I think we should cut straight away to TCS. The management is just about started speaking.
Report that we have delivered another strong quarter and have closed the year FY14 with a good run rate. Numbers in terms of revenues, we delivered on an annual basis 28.8% in terms of reported INR terms. The volume growth on constant currency led growth is about 16.2%, and the dollar terms is 13.7%. A volume growth of 16.8 translating into a constant currency growth of 16.2, primarily because of some offshore movement. So pricing has been stable through the year, and we have exited the year at 27% EBIT margins, in spite of the one-off charge that we had to take during last quarter of about 161 crores. The net income is about 13,941 crores. On an annual basis, it's up about 31%, 30.8%. On an annual basis, net income margin is up about 35 basis points. All the markets, all the industries delivered a double-digit growth, and we added 153 new clients, and we added 69,728 professionals at the gross level, totally 276,196 employees at the end of the quarter. The retention levels are very high, and we still continue to be the lowest attrition company. On a quarterly basis, we delivered a revenue growth of 2.2% in rupee terms, 3.1% in dollar terms, and about 4% in constant currency terms. The volume growth for the quarter was 4.4%, and for the first time we crossed $3 billion on a quarterly basis. The revenue for the quarter was $3.04 billion in US dollar terms. The operating margin for the quarter was at 26.5%, in spite of the two major headwinds we had, one a settlement of 161 crores and the currency headwind of about 100 crores. In spite of that, we were able to overcome the pressure on the margin and report a healthy margin. 52 new clients were added during the quarter, and many large deals were signed, at least 11 that we report today. And we added 20,098 professionals at the gross level during the quarter. Utilization is very healthy at about 82%. Looking ahead, our deal pipeline is strong. We continue to see a strong momentum. Deal closures are happening. We see traction both in the run the business as well as in discretionary spend. And we are positive about all sectors, including financial services. And particularly, we also feel that telecom will see the recovery from the coming quarter and year onwards. And with those comments, I would like to take questions.
Okay. First question comes from Kritika of CNBC.
Congratulations, sir, for a good set of numbers. Since it is Rajesh's first press conference, I'll start with you, Rajesh. In terms of margins, Chandra said there were two large headwinds. Can you break up the impact of these two headwinds, the settlement as well as currency, on the impact on margins?
Yeah, the impact of currency on margins is 64 basis points negative. and the impact of the settlement was 98 basis points negative.
Okay. Rajesh, your outlook on pricing as well, it's been steady, fairly stable. Is there any scope for an uptick, or is there your comments on that?
So we are in a fairly stable pricing strategy and a pricing regime. Within that, depending on the mix of businesses, mix of geographies, you would see some amount of up and down on the realization, but broadly the pricing band remains fairly stable, and we think that that's going to continue for the next year also.
Okay. Chandra, if you could break up volumes, how has the volume growth been across your services, financial services? If you could also take us to the kind of growth that you've seen in telecom on a sequential basis, and even manufacturing retail in last quarter, they'd crossed double-digit growth as well as always. So how has that been?
So double-digit growth has been for the year. Okay. On a quarterly basis, the overall volume is about 4.4%. And all the industry segments have delivered growth during the quarter.
Could you break this up? Financial services, telecom, and manufacturing.
I can give you, but actually financial services is the highest at about 5%, I think. And the other sector which has done well is manufacturing and retail. Both are about 5%. Most of our sectors are lower single digit.
How is the Q-on-Q performance been for telecom, sir? For telecom?
Telecom has been a marginal growth.
Okay. So just, you spoke about deal pipeline. In all, is there, overall discretionary spend could be flattish to a marginal uptick, or are you bending towards an uptick that you're seeing in the overall deal pipeline?
They're bending towards an uptick.
Okay. And you still maintain for FY14 you will be able to cross NASSCOM's guidance?
Yeah. We are, our commentary for FY14 is that it's going to be a better year than FY13. And we will be ahead of the NASSCOM numbers on constant currency terms.
And across geographies, US, Europe, there is a steady pipeline?
We are seeing a steady pipeline in US, Europe, Asia Pacific, Latin America, across the board.
Okay, last question. Ajoy, in terms of hiring, does your for FY14, the hiring outlook remains the same, the numbers that you projected last quarter?
The last quarter I had given the numbers of trainees that we had hired. We had already given offers to 25,000 trainees, and they will start joining from Q2 onwards. And as far as the total number of people that we will be hiring, I had not mentioned a number last time.
So what is the total number in that
case? The total number that we'll be doing is about 45,000.
45 for the full year?
Full year.
Thank you.
Astha from NDTV Profit.
Congratulations, sir. So the first thing, how's the deal renewal situation right now? You did mention about it, but in talking about the quarter did bend by and also coming, are we expecting any further, how's the situation overall?
I think the order book, we don't publish the order book number, but the order book levels during the quarter has been very good. We find that the decisions are getting made and deals are getting closed, ramp-ups are happening. So our view is that the